The crypto market is expanding. Bitcoin is hitting new all-time highs. Everything is green, but some assets are more green than others. And Moonpig seems to be one of the top performers. Yet the market cap is still relatively small. Does it make sense to still jump on this rally? Let's have a look at the on-chain data, the data most people are not looking at. Now, here is what most people do. They just look at the website, they try to get some information this way. But unfortunately, this is information everybody has easy access to. So how do you expect to beat the market to know more than the average participant if you're just looking at the data everybody else is looking at? Instead, let's start with the hard facts. Moonpig is already the 13th largest trending cryptocurrency on the Solana chain. It's got 2 million of liquidity. The chart is absolutely phenomenal. We are now at 6.8 cents, and even on a logarithmic scale, even though initially there was more percentage gains to be made, the growth is still relatively constant. So in the last 24 hours, we saw more than 5,000 wallets interacting with the token. And of course, most of those wallets are buyers, not sellers. That's why the price is going up. Now, Moonpig was launched via the pump.fun ecosystem. So that's the launchpad for meme coins on Solana. And there was a lot of hype around that platform at the end of last year, beginning of this year. And then this tended to slow down. This is a brutal player versus player game. So if you're not getting into the rallies early enough, you do get wrecked. So this is not just pump and fun, this is pump and dump. But how much pumping do we have until we dump? Now currently, most trading volume still happens directly on PumpSwap. So that's the decentralized exchange on the Solana chain, 14 million of trading volume. But interestingly enough, there are already perpetual futures on MEXC. So there's a possibility to bet on the price with leverage on a centralized exchange as well. This is an interesting data point because this hints towards potential adoption by other centralized exchanges at some point. Now, right now, the number of holders isn't yet too large. We are only at 6,720 holders. That's not much for a meme coin. Compare this to the 4,700 followers on Twitter, or now called X. And let's have a look at what's happening on chain. So on the left side, we see the number of new traders versus recurring traders. On the right side, we see the number of token transactions. Both are daily charts. So we saw a massive influx of new first-time traders on the first 3 days. Then a secondary wave that started on the 10th of May. So that was over here. And now the price is rallying again massively, but the number of traders isn't necessarily going up as much. So it seems like currently what's going on with that rally is not necessarily a lot of new people getting into the token. It seems like accumulation by the big guys. So the number of wallets is not increasing, the number of transactions though is. Now here we've got the trading volume. So on the left side in US dollars and on the right side normalized to 100%, we look at the different wallet segments, as in how large is the wallet that's holding the token. And we see increased trading volume over time. We don't necessarily see how one particular wallet size is dominating that increased trading volume. Let's have a look at the number of holders over time. So on the left side, we see the number of small holders. So the number of wallets that have at least 20,000 Moonpig tokens. So at the current price, that's roughly $1,000 worth of the token. In the middle, we go a 10x from that. So 200,000 tokens or $10,000 worth of the token. On the right, another 10x. That's now the whales. That's at least $100,000 worth of the token. There are currently 82 such wallets, and they bought pretty much everything in the first days. They did not buy again for the secondary wave from the 8th to the 10th of May. So isn't that fascinating? The number of retail investors is not going up recently. Even the number of whale investors is not going up. The number of traders is not going up, but the number of transactions is, and the trading volume is going up as well. How could we explain all of this? I think the current whales that hold the token, they are accumulating more and more of the token. So it's not more whales coming in, it's just the existing whales that buy up more of the supply. Now this could be market makers, independent market makers. It could also be the centralized exchanges that plan on listing the token. And here is why I have this thesis. This is the token ownership based on wallet cohort. So the whales are the wallets that have at least $100,000 worth of the token. They now own 77% of the supply. Medium-sized retail, so that's now between 10,000 and $100,000 tend to own less and less. Small retail, of course, as well. And even large retail tends to get less and less of the token. So really, it's a takeover by the massive whales. The number of retail investors on chain is not growing for the last 1.5 weeks. The number of wallets that interact with the token isn't growing either, but the price continues to go up because a few select whales that already own a lot of the token just buy up more and more. And so what I think is going to happen is that the Moonpig token will be listed on other centralized exchanges. And with that listing, the price will of course jump one more time. Now at that point, it probably makes sense to sell because at that point, volatility is likely going to increase. We might see more perpetual futures, more short-term levered capital in the token. And then it becomes even clearer of a player versus player game. Then the opponent is not just the random retail investor, then the opponent is the market makers. And they tend to move the price in the exact opposite of where the masses are going. Now, to a degree, the crypto market is just a reflection of unregulated life. As in, most gains come just to a few people, to a few assets. The vast majority tends to lose. So if you're just taking a broadly diversified portfolio of assets, we're likely going to not perform that well. Because here's the thing, crypto does not have any regulation. Everybody can launch a coin, and so there's no real barrier to entrance. And because of that, we tend to see a lot of fraud. We tend to see a lot of setups where tokenomics are rather poor, so where the average investor tends to not make money. And so when crypto cannot create money out of thin air, when it's actually a sophisticated system of moving money from the not so well informed to the better informed, then how can we become better informed over time? Because surely there's also a luck component involved, but there are some people that tend to win long term. Now, it's obviously not easy to become part of the minority. If we are not launching a project and we know more than the rest about that project, then how can we still become insiders? I think the best answer is to try to figure out what the insiders are doing and then simply copy trade them. For example, over here, we've got the Martini guy, and he bought the Chippy token when the market cap was still at $455,000. Now have a look at the comments on that wallet signal. The Martini guy tweeted about Chippy 2 hours after he has bought himself. And so since we are in a market without much regulation, and since we are in a market that does not produce any wealth, it's just transfer from one to another, it's all about figuring out an unfair advantage. And the unfair advantage of Martini guy is to simply have a following, right? He's just buying and then he tweets about it, and then the price goes up by more than 50% in just a few hours. Here's, by the way, his YouTube channel. He's got 150,000 subscribers. And so when we know what the insiders are doing, when we know what the influencers are doing, we can replicate those trades. Now, the art is in finding the right wallets. And we are tracking 12 wallets of Martini guy. In total, we are tracking more than 500 wallets. So 12 are by Martini guy, but we've got a lot of other influencers as well. For example, check out this signal over here. This is YouTuber Jesse Eckel. He bought $10,000 worth of the winner token on the 2nd of May. And surprise, surprise, on the 6th of May, he published a video about the winner token. And so, of course, the price also appreciates in the top by almost 50%. And so really, it's a game of attention. It's not a game of fundamental analysis. Most YouTubers, they simply just buy the asset and then they promote it on their channel. And then later on, they might sell it at a higher price. Don't get distracted by all the noise. We're also following Alex Becker, for example. So we've got 12 of his wallets. We are tracking Crypto Banter. We've got 33 of their wallets. And here we've got Brian Young, who, by the way, bought the virtual token extremely early. And we've got 5 of his wallets. So how do we get all of that data? How do we know what influencer holds what kind of wallet? And how can we then create those signals that we can actually buy and sell with them? The answer is through on-chain analytics. So there are several approaches. We can, for example, look at what kind of NFTs does somebody hold. We can then see, are there maybe potentially deposit addresses on centralized exchanges? Did other major deposits happen to the same kind of wallet? Are those wallets potentially connected? We can also look at prior purchase histories. So let's say we've got an influencer that talked about very small altcoins in their Twitter or in their YouTube. Then we look at wallets that held all of those altcoins and that potentially bought them also before the tweet or before the YouTube video. Then we've probably also got the right wallet. We can then afterwards confirm this, right? We can look at what is the wallet buying next. Is there again another tweet or another YouTube video on this? If the answer is yes, it's probably the right thing. We we're then continuing to track it. And so I've made an entire video playlist on how to find different wallets and how to track them, how to then get the signals and how to interpret the signals. And so our entire community is trying to find new wallets, discussing this in the wallet research channel. And then once we found an agreement, we add this to our influencer trade tracking channel. And so the idea is pretty straightforward. We're trying to generate as much outperformance as possible that in the end, the membership more than pays for itself. Now there is some funds needed, right? We can't just trade with a few $100. I think the best portfolio has at least $5,000. Once you are at 5,000, you should be able to make that money back. Now, if your portfolio is larger, then you can consider to potentially sign up for yearly as well. First of all, there's a discount involved. So there's $250 off. But secondly, there's also a 1 hour free Zoom call. So in case you've got a larger portfolio in crypto, but also outside of crypto with other asset classes, and you could benefit from a direct one-on-one call, the yearly membership might be for you. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.